Hello and welcome to a Xero How To, and today we're going to be looking at how to set up your chartered accounts, but most importantly, how to avoid common errors which we often see. So I'm just going to share my screen with you guys and hop over to the demo company. So first things first, how do we get to our chart of accounts? We go to accounting and we go to chart of accounts. So in here we will now see a list of our various accounts. And quite helpfully, this will be sorted in code order, and we will see the various types of accounts involved and the default tax rates, which come in very handy when it comes to reviewing these items. So the first thing to note with chart of accounts is the code numbers. If you're using Xero and you're running with the defaults, what you'll find is that these codes are grouped in a logical order. So you'll find that your sales items will start with a leading 2. Your cost of sales items will start with a leading 3. Overheads leading 4, and so on. Now this is really helpful when we're assigning account codes within, say, a bill or a purchase or a sales invoice, because actually we can see in ascending order what we're looking at in terms of coding. So that's a real handy little feature, and if you are updating chart of accounts, I'd recommend building your additional account codes around this structure.
It also helps, one of the common errors when you're coding sales invoices is to code them to a cost account, or when you're raising sales invoices, you code them to the cost account, or when you're posting purchase invoices, you post them to a sales account. So if you know which the difference between the 200s, 300s and 400s, it helps to avoid that kind of error.
Yeah, because it might be something like you have a similar naming convention for revenue. You might have sales consulting and then further down have consulting. So it quite easily happens if you've got things like that.
Yeah, we do see that quite often, don't we?
That one's a really common one, actually.
Same name, yeah, definitely.
Speaking of naming conventions, we do actually get some other issues which cause a little bit of common error. So the first one is I've filtered my chart of accounts by entertainment. And here we can see we've got two entertainment categories. Entertainment 100% business. In fact, I'm just going to zoom in so it's a little bit clearer. Entertainment 100% business. Entertainment 0%. Not particularly handy because it's not really clear what they mean from the off.
No, and that causes massive confusion, doesn't it? So that's one of the first ones that I think we should rename.
Now, here we have two different account codes, two different tax rates, two completely different accounting treatments. But entertainment 100% business, what it means in a nutshell is 100% of the cost is allowable for a business expense. It can be recovered against corporation tax. You can recover the VAT. So this is basically staff entertainment.
Yes, and it's confusing by calling it business.
So first thing I'm going to do...
when you've got a business expense,
it's going to be
entertainment,
business,
that's what you look up. So not knowing that there's the other code. So I would rename those immediately.
So first things first, I'm going to rename this entertainment. I might just actually call it staff entertainment, make it nice and clear.
Now I call it entertainment
staff.
So that it comes up in the conventions clearer.
And entertainment staff. And this one is entertainment for clients or business or however you want to call it. Do you want to call it clients or business?
I say business because it's not just clients, is it? It could be suppliers. It's anything where you're taking somebody else out with the expectation of profiting from that transaction later on. So it could be a contractor, it could be a client, it could be a supplier. So keep that down to business entertainment.
And another important one of these is we're keeping the tax rate defaults as they are. We want no VAT recovery on the business entertainment because it's not eligible for VAT recovery in the same way as staff entertainment. So that's the first one that often causes a little bit of confusion.
And the second one is things like office equipment. Now, office equipment is a fixed asset account. So it's various spends like you would put your computers and your printers to a computer account, but you would put your desks and your cupboards and your sort of fixed furniture type assets into an office equipment. Now, we quite often see stationery and small items like that, folders, papers, are coded to office equipment because although we would call it stationery, somebody else might call it office equipment. So what we would recommend is changing the account name of this one to office equipment assets, so you don't have to worry about it being a 700 code, you don't have to worry about it being a fixed asset code when you're accounting for your transactions. But when you see that office equipment comes up as an asset, you know not to put small items there. Now, I would then create a second account And if you do call things office equipments rather than stationery, or that's the term that you often use, I would add an account for office equipment small items or office equipment expensed items. So if you go to the top and add a new account, Harry.
Yeah. So just as a little pointer, what I would do if I'm adding a new account is I'd firstly have a look down my chart of accounts, see roughly where it fits in, and look for a gap. Because if you try to add an account code and you start typing in 445 and it says you can't use this, you end up just typing numbers randomly until you get somewhere. Yeah. So it might actually fit in quite nicely around this region here, around the 460s.
Let's have a 462. That'll fit quite nicely, won't it?
So 462. So the code is easy enough. Now we're going to look at the account type. And as you can see, there's quite a few different account types to cause. Now, to use. This is one that causes a little bit of confusion and often causes errors in its representation within a given report. So it's got a little overview of how it will be displayed within your relevant reports and your balance sheet and your profit and loss.
Yeah, which is quite handy, isn't it? So if you're not sure, check on the structure at the side. But there are three main ones to look at. So in you're going to have direct costs, overheads, and revenue in your profit and loss account. I wouldn't worry too much about expenses. It does things different, slightly different things in master reports. You don't need to worry about that. You're probably almost never going to use a master report. But if you're setting up Xero account codes in your chart of accounts, just stick to revenue, direct costs, or overheads. So this one will be an overhead.
Simple. So we're going to call this one office equipment as mentioned before.
Yeah.
But this one, we haven't put, obviously, the asset reference because it's a P&L cost.
No, see, I would call that office equipment, keep the dash again so you've got the same name in the convention, and then call it, I would call it expense assets. So these are things that are under £100, and then I would probably write something in the description that says small office equipment under the value of £100 as a mental reminder to, if you get stuck and you're not sure what you should put into that account, you can look at your chart of accounts and check what's going in here. So if it's under £100, expense it to your profit and loss account. If it's over £100, it's probably an asset.
So I'm just going to save this one, and you may notice there's a few boxes down here, but we don't need to change any of those just yet. I'll show you how these come into play. So that's how I'd add a new code, nice and simple. So basically, there's value in your chart of accounts by renaming things to make it easier to avoid errors. So avoid confusion, rename any codes if you're looking thinking, I don't really know what that one means versus that one. Find out what they mean, rename them, make them more unique to your business.
Yeah, another one that I quite like to have two accounts for is IT software and consumables, if you look just down there. So the typical default for IT software and consumables is assuming UK VAT at 20%. But an awful lot of the subscriptions and the IT software that we subscribe to nowadays is all US based, so is usually 0 rated or no VAT. So I would add a 464 code for IT software US and set the default on that to no VAT. And that means that your Dropboxes, all your US subscriptions all go into that account. You don't accidentally reclaim VAT on something that you shouldn't do.
Yeah. Does just take out, if you can default some of the tax rate, it just takes away the risk of claiming something in error. So basically setting things up here is a protection for your business for the future, so it's really handy to do.
Yeah, and then there's another one just below there. So rates, for example, you would never pay VAT on rates, so change that one to no VAT.
And saving that.
Yeah, but rent you might do. So rent, you might pay VAT, you might not pay VAT, depending on the VAT status of the building that you are occupying. So check your invoices from your landlord and change that accordingly, and then that stops you from accidentally claiming VAT on a rental payment.
Yeah, and one thing to note is when you do create a new account code, it does default, the second you change it to overhead, the tax rate will automatically default to 20%. So do please check this when setting it up, because that's one that sometimes catches people out. They just change everything else. They don't think to do that. They save it, and then they end up accidentally miscoding things by applying VAT when they shouldn't be.
And then we find it in the VAT checks.
And then we find it in the VAT checks and remove it, and then it's...
Yes, indeed.
So there's another feature in here which is really useful to look at. Now, it's these drop boxes down here. I'm just going to show you a little bit of this. So let's have a look at my dashboard and see if I've got anything on the watch list. I'm just going to zoom out a little bit. see. So if I go to my dashboard, I've got an account watch list here. Now, at the moment, I can see advertising and marketing and some various other categories, but I might actually want to track something alongside sales. So I might have sales for a given customer, and I might want to track the cost of sales, just as a little example. So I might actually track, there's nothing in cost of goods sold, but I'm going to use purchases as an example. So if I drill into this, I now have these 3 drop boxes down here. And what I'm actually going to do is show it on the dashboard watch list. And I'm going to click save. Then if I go back to my dashboard and refresh this, we can now see on the right hand side, we have another section with our account watch list. So we can keep a track of our sales and the corresponding purchases with those.
Yeah. So the only thing to watch out here, if you've got balance sheet accounts that are being watched, is that the negatives and the positives are often shown the same way around. So negatives, sales, for example, are a credit in your accounts and costs are a debit, but they'll look all positive value on your chart of accounts here. So watch out for that one. It's really handy once you learn how to use these. One of the other things that we quite like to see in here is tax liabilities. So if you go into the accounts and find corporation tax, for example, let's change our corporation tax code. So we've got a balance sheet provision for corporation tax. It's got nothing in it at the moment, but if you change that, so provision for corporation tax, say for year ending 31st of March 2019, payable in December 2019, when you actually have a balance there that is due to be paid, it will show in your watch list as a permanent reminder until it's paid, of course, that that amount is outstanding and due.
Just realised I didn't actually tick the box.
It won't show because there's no cash in there.
No, I did tick the box. I did.
Oh,
It will show.
Yeah.
Now, the one thing to note in here is you'll see this month and you'll see year to date only on your watch list. And the reason I'm drawing attention to that is because your provision for corporation tax, what you might see is you have a liability in here and it looks like you've got a liability in this month. But if you've recently paid it, your year to date figure will actually be 0. So I'd refer to the year to date figures for any balance sheet accounts. Otherwise, if you refer to this month, it's like, oh, I could have sworn I paid that. Yep, you did.
Yeah.
It's recorded here as a 0.
This is also quite handy if you are providing for corporation tax. So you could set up another provision for corporation tax account. If you go into the corporation tax. Now, we don't want to end up with lots of 830 accounts. So what we can do here is create a sub account. So call this one 830, say 19, because it's year ending 2019. And then copy all that over.
I'm just going to add my years in because I didn't earlier in my little example.
Then if you copy that over and create a new one for 830.20.
Get a little bit carried away myself.
That would be, say we were accruing our corporation tax for the next tax year. So our accountants are coming in and they're putting a tax accrual in. And then we're going to pop back onto our balance sheet, our watch list. Haven't had enough coffee yet. And there you can see the account pops up here. So you can shorten the account codes if you need to, but we quite like to see the date, the year-end date that the tax relates to, and the payment date, so that we've got that as a reminder every time we log into Xero that that tax is due to be paid on whatever date it is going to be paid.
Massively helpful, that little tip.
Yeah. Now you could do the same with VAT. I'm not going to go into that today, but you could do the same with VAT. You could go into your director's loan accounts and all the things that you ought to be keeping an eye on. You could track here in your watch list. So super useful. And then you create that watch list from your chart of accounts. Now also remember, if there's stuff that you don't want to see anymore, so say we don't want to be looking at advertising and marketing anymore because we've got that cost under control, take the clutter off your desktop and remove it.
And you simply go into the account code and you remove it from the show on dashboard watch list.
Fantastic.
And then we tidy up our lovely dashboard so it's much more easy to see what's going on.
Yeah.
So another little feature in there, because we mentioned about the drop boxes, is actually, I'm just going to have a look at one. I don't have one, but if we do have, say, a company we're carrying out contras with, we might actually have a contras account. I'm just going to add one. I'm not necessarily going to make it too detailed just yet. But say we have contras.
Actually, I quite like a contras accounts for check failures, direct debits, and all that kind of stuff as well.
So you could have failed transactions, bounce payments. So there's a few elements you can put in here, but I'm going to use this one as trade contras just for now, just because I can't to rename it. But basically, I'm going to save this one. And what I have here is I have an account code which I am using to offset bills. So if I was in a bill, I'd have the option to post a payment. Now, at the moment, I can't actually post a payment to this account unless I select the option to enable payments to this account. Now, just to show you what I mean by that, I'm just going to go into a sale, any old sale, and I'm going to open any old invoice, don't mind which, just one that's outstanding. So I've opened up Bayside Club, and at the moment, I'm trying to mark it as a payment to a contra account. I don't currently have the option on my paid to list. However, if I go into my dashboard, my chart of accounts, and enable payments to this account, just going to refresh this item here, so the actual status applies. Now if I look at paid to, I have the option to post it to my trade contract account.
Yeah.
So that is why we would use that. Now the same thing works for a purchase invoice as for a sales invoice.
Yes, but the thing to be really clear about here is if you're going to contra something off, always make sure you contra the sale and the purchase off at the same time, so that you don't come back later. Your contra account should always have a nil balance. So again, that's something that I would have in my chart of accounts flagged as a watch list item, so that you can see if there's ever an item in your trade contras that doesn't balance, you know there's an error on your watch list and you need to look at it. So
just to prove a point,
I'm
going to show this on my dashboard watch list.
Yeah.
I'm going to go back to my dashboard.
And it's going to show a horrible balance that shouldn't be there.
And I know straight away my trade contras for the year to date doesn't net off to zero.
Yeah.
So I know I've missed the other half of the transaction. So that's why that's really helpful for that one. Then the other thing we would say with chart of accounts is if you have multiple companies within Xero, perhaps they do intercompany trading, or perhaps they're just two companies which are quite closely related, I would recommend using a similar convention for your chart of accounts if possible, because all businesses will be the same.
It'll make life a whole lot easier, won't it, when you're doing the accounting, to be looking at two separate chart of accounts that are the same rather than different. Yeah,
exactly. And it's like if you change the naming conventions in one, I'd recommend doing the same with the other one. And that way, all your codes are in a similar sort of order, the similar numbers, the similar references. It means when you're allocating your account codes, it's much easier to see what's going on, and you're not constantly thinking,
errors,
So that's one that often causes a little bit of issue. The other one in chart of accounts is please do future-proof any code. So if you add a code, I'm just going to show a little example. So if I'm going to add a code, I might have printing and stationery. I could choose to perhaps separate it out into printing as one code, stationery as another, but it might be a bit silly to separate out stationery to say pens, paper, pencils, etc. because you're not really going to use them that much.
It's what you're going to measure. If you can manage it, then measure it. Otherwise, just stick it in the same account code and keep it simple.
Exactly. And most importantly, please do maintain your chart of accounts. There's a temptation to sort of set it up and leave it. I would just review this every now and again just to make sure that things are working the way you want them to.
And the best way to do that is through your management accounts, isn't it? So as your management accounts telling you what you need to know to run your business, and if it is, then that's great. And if it's not, then look at your chart of accounts to see how you can expand or reduce your account codes to make that more easy to understand.
Exactly, because it's easy to add data, and then sometimes it can get a little bit out of hand, and actually you just need to simplify it right back down. Not too far, but you get the point.
Yeah, see, I'm a big fan of going the other way. I'm a big fan of having more account codes, but then summarising them in the report.
I'm the same.
Because you can measure, you can track, you can budget, you can forecast. Sometimes they've got different tax treatments for VAT, so it makes your forecasting a lot easier. So I'm a big fan of more is more in this instance.
Definitely.
But you can change your reporting to simplify. So you wouldn't want to send, a great big profit and loss account out to your bank. You'd want to send them a much shorter version, which you can do. But if you're trying to measure and track and forecast, and you've got, say, one great big account code called purchases that you've got all of your direct costs in, that's so much harder to forecast and understand or track what's under or over budget if you haven't broken it down into all of its component parts.
Basically, the more detail you have in your chart of accounts, the more you can format your custom-made
The more
reports.
control you can have.
Yes.
And I think that's the key thing. The more control comes with more account codes.
Yeah, so detail, very useful. Please do review these.
Yeah, but not the minutiae. We don't
Not the
need to be
minutiae.
measuring grains of rice and pens and all that kind of stuff. So you've got to be sensible.
Yeah. But that's it for today, everyone. I hope you found this useful. If you do have any questions or queries, please do let us know in the comments. And likewise, if you like the video, please do let us know. We'd love to hear it.
Yeah.
Thank you very much, guys.
Thank you very much.
Take
Bye.
care. Bye.